Time for another stock review. This time we're talking VLD, Velo3D. We're talking AI today because we're talking 3D printing. Futuristic stocks, this stuff. We like this. Very careful though. It's very hard to pick the winner though. So you might prefer an ETF, but we'll look at it today. I'm going to give you a review of this stock. It's honest and real. I'm not paid to do it, not sponsored by anyone. I'm going to give you my fair, honest review of the stock. Full disclosure, I don't own the stock. I only own the S&P. I'm fully invested with the S&P. In this review, you're going to see the profitability score, the solvency score, who's buying on the inside, who's selling on the inside. You're going to see all the inside trading. You're going to see their profitability score, their solvency score, their balance sheet, profitability. All of it is going to be covered here, including we're going to take a look at a back test as well. We're going to have a look at a back test and compare it to the S&P. We're also going to look at the website, the latest news. All of that is going to be covered in this video, and hopefully you then can make an informed decision whether you should invest and you can in fact make some money from this stock. We're going to cover all of this for you. All right, so let's go, without further ado, let's get straight into it. If you tap the like button and subscribe, this is being made during a live show, so you might get people react, you might get subscribers or people comment, because if someone does a super chat with a comment on it, it'll put it in this video and it'll read it out. Maybe they want to have their say in the making of this video, which will be an evergreen video, sit there forever online. Okay, so let's get straight into it. Now, also, we run a Meet the CEO series at the same time. If you'd like to invite the CEO to the show, we interview CEOs. You can have them on the show. The invitation video for them is below in the description of this video. So if you are an investor and you like this stock and you'd like to see it do well and get promoted, because I rank #1 for many of the stocks that I cover on Google and YouTube. So you might like to, invite them on the show so we can learn more about them. And please do. All the information is below in the description. And we'll have them on the show and, draw a lot more attention to the stock. Again, even though I might rank #1 for the stock after a week or so of doing this, I'm not here to promote the stock or dump it either. I don't own it. I just want to talk about great companies and support great companies and hope all of you make money and keep people employed and do great things for the world. That's essentially why I'm here. I'm here to help you, not to benefit myself. That's not my benefit, is you watching and enjoying the show. All right, let's go straight into the stock and let's have a look at it closely. If you've not tapped the like button yet, please do, and consider subscribing to the channel. Now then, the stock is at 47 cents, so it's a penny stock. Anything under $5 is a penny stock. It opened up here. It looks like it was a SPAC, was it? Was it potentially a SPAC? 11.10, normally opens at 10, so maybe wasn't, but anyway, opened at 11.10 and look at it now, 48 cents. Had a few spikes. You might like to look on the investor pages and see what happened here, but essentially it's trading down. It may have found a bottom now because we've got a period. If we look at the scale, apart from here, we've got a period, if it's sort of going sideways for a comparable time. Everything else just seems to keep falling away. Anyway, that's just basic. We're going to go into a much greater depth in a few moments. Velo3D operates a technology company which engages in developing, manufacturing metal laser sintering printing machines for 3D printing. It produces, its products include Assure System, Flow Software, Sapphire Printer, Sapphire XC, and SupportFree process. I beg your pardon. The company was founded by Benyamin Buller in 2014 and headquartered in Campbell, CA. The listed name VLD, Velo3D. Campbell, California, 294 employees. Bradley Krager is the CEO. Bradley, I'd love to have you on the show, learn about your company, share it with the world, and we'll rank #1 on Google and YouTube for it. And I'd love to be able to tell the world all about your business. If you're buying it on margin, however, it's regarded as high risk. No surprise by looking at the chart. 100% maintenance requirement is regarded as high risk. Low volume, well, there's some volume there, actually, 10.29 million, not insignificant. No dividend yield, of course. It's losing money, 151. Price to the earnings ratio, what you pay to what it earns you, is negative 151. So there you go. 52-week low, 18 cents. So it has been lower than this. 52-week high, 250. We're up 7% today. It is rising today. We are seeing a bit of a bounce today. Okay. Carrying on, moving on down. The earnings. Are we growing? Well, we kind of, we're losing money. We dropped off. We had a little rise there in 22, fell away, sideways. We are missing on expectations, but remember, the expectation is not set by the company. It's set by Wall Street. So, they didn't say they would make that and miss. Wall Street anticipated they would make that and miss. All right. Estimated is 8 cents a share on March 26. There'll be a new earnings. If this gets a lot of attention and people like it, we then, of course, might cover the earnings. My members dictate where the show goes. Who else is buying this stock? Ginkgo Bioworks, ChargePoint, SoFi, Palantir, Lucid, Arch Aviation, other penny stocks, pretty much apart from Palantir. Palantir is a great company, but it's overbought, so it's very expensive. Lucid is ridiculous. It's going private. Peter Rawlinson's made sure of that by taking all the money out of the company. He's destroyed it. Arch Aviation, high risk. SoFi, great company, but the CEO talks rubbish. He doesn't understand what the economy is doing, makes wild predictions that have no relevance to sense and common sense whatsoever. ChargePoint 165. I've reviewed it recently, but I can't remember what I thought of it. Ginkgo Bioworks, I reviewed that about 6 months ago, so that my thoughts are a bit out of date on that one. But what you've got here is very volatile traders. The stock that is owned by a lot of very volatile stocks. Anyway, let's carry on. Can you make money from this stock? We're going to look at the website now and learn more information from the company and see if we can rub our chin a little bit and mull over the numbers and see if all of this makes sense. Well, let's go straight now into the website and see what we can see. First of all, let's go over here and have a look at the opening website. Let's have a look. And this is the homepage. Learn a bit about the company. There's the equipment. Leading provider of metal 3D printing solutions. Velo3D advanced fully integrated metal additive manufacturing processes. Let's scroll on down. There's some equipment. Design freedom. We're not going to go into all of the equipment. You can do that yourself. It's velo3d.com. I'm just showing you some general stuff here. Affiliations and recognition. What have we got here from who? Whoops, a daisy. When you zoom in, it wants to take you up. That's a bit weird. Okay, never mind. Most innovative companies, affiliations, America Makes. I've not heard of those companies. I'm not saying for a moment they're not big or successful. I've just not heard of those, but so I can't comment on them. Okay. Let's look at the latest news. We understand what the process is about, but this is some latest news just out just a few days ago. Bechtel Plant Machinery selects Velo's 3D metal additive manufacturing solution to revolutionize the supply chain for the US Navy. Very nice indeed. We've got a US Navy contract, okay, potentially here. Let's read on. We like the sound of this. Government contracts are always good, but they can also be taken away very quickly as well. Let's have a look. Velo3D today announced that Bechtel Plant Machinery has selected a fully integrated metal additive manufacturing solution from the company to produce parts for the US Navy nuclear propulsion program. Very good news. The Sapphire XC large format printer, calibrated for stainless steel 415, will be operated by ATI at its new additive manufacturing facility outside Fort Lauderdale, Florida. Earlier this year, BPMI awarded a contract to ATI to support development of highly engineered part solutions for advanced manufacturing methods, including metal additive manufacturing. The partners will use the printer to produce parts previously produced through casting, reducing lead times for mission-critical parts and streamlining their supply chain. Okay, let's read a bit more. Velo's 3D technology was developed in the United States and included a fully integrated software and hardware solution. The company is headquartered in the United States, including its research and development, customer support, and manufacturing operations. I think we've already read all that through. That's about the company. Okay, but we've got this deal here, potential deal at least anyway, with the US Navy. All right, good. Well, let's now go on to the numbers. At the end of the day, we want to know if this company makes sense from a business point of view, an investment point of view. So we're going to do that now. Smash the like button if you like this. We are doing reviews live today. Sensei is doing the trading on the extra channel. Link is in the chat, pinned to the top. Okay, let's move on and see if we can make any money from this business. Does it make sense? We're now going to take a look at the numbers, starting with the intrinsic valuation. Here we go. Right, the intrinsic valuation does say we are 77% undervalued on the base case, the best case 78, worst case 77. Is this a reliable valuation though? No. Intrinsic valuation estimate is unreliable because it's based only on multiples and doesn't use DCF valuation. So it's unreliable. It's the best that we have, but we don't have more information to be able to be more accurate. But this is the intrinsic value. Remember, just because we give it an intrinsic value doesn't mean it's going there. We look at the intrinsic value for Fisker, and Fisker is massively underperforming, but that's due to outside conditions. The potential value of the company is sky high. But with its debt situation and everything else, it's not performing. So understand what an intrinsic value is. If you might like to zoom in there and pause the screen and have a look at what an intrinsic value is. But it's a very important metric. You just need to understand it. So you might want to pause it there, and you can then read that at your leisure. Now then, this is the earnings call from Q3. We got Q4 coming up in a couple of weeks' time, so we'll see how it all pans out. But right now, this is what we have. The third quarter revenue of 24.1 million were under guidance. Marred by delayed shipments and poorer sales mix that led to slight sequential decline. Gross margin fell to 7.2%, hampered by lower system volumes and pricing. Not good so far. However, a mixed shift towards higher priced products and gains in operational efficiency are expected to improve margins. With full year gross margin of 2023 projected between 9 and 12%, operating expenses dropped by 10%, with research and development expenditure decreasing to 9.8 million. Okay. Recognizing a GAAP net loss of 17.1 million, the company implemented initiatives expected to bring a 40% cost reduction in Q1 of 2024. That's what we're about to find out. Did that happen? Well, we'll know next week. And to reach free cash flow break even by Q2 next year. Q4 2023's revenue guided to be 15 to 27 million, and the cash position closed at 72 million, sufficient for purchasing profitability in 2024. The updated full year 23 revenue guidance is anticipated to be 91 million to 103 million. I wonder how all this will pan out next week. All right. Financials, 105 million, up 5% on the most recent range, and we are expecting things to improve, and hopefully they will on the next earnings, which is next week. Operating income is up 3%. Very, very nice. Net income up 52%. Financing cash flow 145% upwards. Investing cash flow is up 22%. That's a negative. Operating cash flow up 0.9%. Okay, very good. Now then, balance sheet. 230 million in assets, 127 in liabilities. That's good. We're not upside down then, are we? Cash is 71 million. So we're well funded. Half of our money's in cash, or thereabouts. No, I beg your pardon, not half, about quarter. Let me just look what the cash position is exactly. 31%, that's what I should say. 31.1 is the cash position. That's good. We got some money on hand. Very good. What about, so bearing in mind we have 71 in cash, how much long-term debt do we have? No long-term debt, no short-term debt. 127 million. So it's a good balance sheet. We've got a good asset ratio to liabilities. We've got good cash. We've got no long-term debt. Business looks quite good. Balance sheet looks good. Very, very important. Cash operating margin, well, as you can see, it declined from 34%, now starting to increase 8, 9, and we're expecting to see that go forward, hence why the price is down. Hopefully, the next earnings, this could be interesting for the stock. Let's move on down. Profitability, there you go. See, the margins are decreasing. Profitability, 24. So we're seeing exceptional revenue growth forecast, and positive gross profit, but negative operating income. The margins aren't so good right now. Profitability 24. However, we're not going bust. We've got a 39%. Solvency score, low DE. Short-term solvency is good. Long-term solvency is good. Low Altman Z-score. So we're looking okay there from a solvency point of view. They've got a decent bit of money. They don't have any debt. Interesting. Okay. Wall Street targets. Worst case scenario, 246% upside from here. 249% average and 260% on the best. Wow, massive upside from Wall Street targets. Okay. There's the competition. You might want to compare the competition's margins. If you do, then I'll give you the link to my software and you can use it. What about insider trading? Who's buying on the inside? Well, unfortunately, insiders have been selling. During the last 12 months, insiders have not bought any shares and sold 1.2 million. That's not good. And considering the stock is at 45 cents, we would have thought they'd be buying shares, but they're not. So that's not too good. However, they might be about to. And that's the time to buy because the stock is being driven down. You buy it before they start to buy it. I think it really does pin a lot on the earnings. If we cover this earnings and it pops on earnings, and they're saying there's a potential for that, this is the sort of stock you could suddenly see some inside trading coming in. I just don't know until the next earnings. But the earnings, I think, the moment they announce, this could be very, very explosive on the stock, I would say. What about the short interest? 14.92. Now then, we don't have enough volume here for a short squeeze. We also don't have enough short interest. We need at least 20% with high volume. We don't have either, but we do have a lot of negativity driving the stock down. So it's being driven down by shorters at the moment, no doubt about that, but we're not expecting a short squeeze from it unless the earnings turned around, and they are expecting potentially turning around. There's no point covering the latest news. It's a year ago. Media haven't been paying much attention to this stock. This is all a year ago, so my review will be the most recent review, and that's why we'll rank number one for it on YouTube and Google, because there isn't really anything really covering this stock at the moment. So there's no sentiment to report. There's no news to report. Not a lot of attention. So if with their good earnings, as it's next week, this video will already be ranking on Google. I know that, and YouTube within a few days, because there's so little information. The stock could actually pop. We've seen this a lot. Particularly if we get a good earnings. So let's just recap and see where we are. If you look at a back test compared to the S&P, we do need to do that, so we'll do that now. You can see if you invested in the S&P, which is in blue, your 10,000 is now worth 11 from 2022, whereas if you bought with $10,000 worth of Velo3D, you're now worth 350 bucks. I mean, you've lost nearly all your money. I mean, like 99% of it in red, as you can see there. So what's my final thoughts on this stock? Well, first of all, as you know, I don't own any stocks. I only own the S&P. So you know my reviews are honest. They're not pumping or dumping stocks. Everything I say here is genuine and real. There's no influence whatsoever. A lot of insiders selling, but they are predicting a much better earnings. The earnings is next week. We are expecting Wall Street like it. Their solvency score is good. They're not going bust. Their margins are improving. Their revenue is improving. They expect an earnings to improve. The intrinsic value would suggest it's undervalued, even though it's not reliable. So I have to say, if you like this sector, you might prefer an ETF. You might prefer an ETF of printing device companies, because you never know which one is going to be successful. It's a very new industry. You might prefer an ETF if you like this industry. However, if you think that this stock is undervalued, intrinsically it is, but it's not fully reliable. But having said that, the intrinsic value is at 191, and we're at 44. So even if it's not that accurate, it's still suggesting it's undervalued. They do have some good cash. They don't have any debt. The earnings could improve. Insiders have been selling, but one of my viewers watching it now who likes this stock, I can't verify this information. I don't know. He said the founders sold, but the workers are buying. We're just being sent in some information from our viewers that Cathie Wood owns this ARK Invest. I can't confirm that person isn't a member, and we've got no verification, but I can confirm that ARK Invest and Cathie Wood do like 3D printing. They do, and they do heavily invest in it. That's all I can say. I can't confirm or deny that that isn't true, but I just don't have that information to hand, so I don't want to use it. Okay, but I can tell you that Cathie and ARK Invest do invest in 3D printing. So it's certainly the future. There's no doubt about it. With that Navy contract and the earnings coming up, this could be a potential buy. I don't like stocks this low. Doesn't draw much attention. But at the end of the day, this is a potential buy purely because of the forecast, the earnings around the corner. The fact that we'll rank number one for this stock, it will draw a lot of attention. That US Navy contract, the lack of debt, the good cash position. There are some encouraging signs on this stock. Intrinsic value alluding to the fact it could be actually undervalued. So there you go. This could be a buy, a potential buy if you like to buy a low value stock like this, a penny stock. Click above my head for all the links if you want my software. Down below in the description if you'd like to invite the CEO onto the show. All you need to do is take this video plus the invitation, which is below in the video. It'll give you the information of how to invite the CEO on. I do have the invitation video you can send on. Maybe you'll create a Reddit channel, or maybe you'll create a group, a Facebook page. A Reddit channel is very, very good. Velo3D, maybe you'll create one. Use this review on there. It's relatively bullish, I suppose. And build a community around it, and that way the CEO and the company will get to find out about us, and then we'll have them on the show, and then we could cover the reviews and the earnings much more. Okay, over here you'll find all my reviews and there you go. I will cover all your reviews for you that you asked for. I've done over 110 now, I believe. Until next time, as always, take care of yourselves and each other.